NAR released their monthly pending home sales figures today for May. Those numbers are up and are at their highest since 2006.
Well, their buyer interest still remains very strong. We have to remember these are contract signing that occurred when the interest rates were lower than what it is now. But when the interest rates were low, people are coming in. The sales contract activity up 12% from 1 year ago. These are solid numbers.
In terms of the first-time buyers, what are we seeing with their participation?
We have seen housing market recover very nicely, so certainly good for many homeowners, good for many people who are able to purchase a home, and also good for the economy because with rising home value that begins to improve the overall finances of families and they go out and spend more money. So it's good on many fronts. One drawback is that currently the first-time buyers are not participating in the market as they used to. Normal percentage would be 40 to 45% of all transactions will be by first-time buyers. Right now it is under 30% and it's been persistent. So we have this situation where many young people are unable to reach the ladder of home ownership, which is somewhat unwelcoming.
Well, with first-time buyers not necessarily participating as much, would that perhaps be a good thing in terms of demand and the tight inventory situation?
No, I would say not, because we want everybody to participate if they are creditworthy. So if people have the necessary income, have good credit, they should be able to participate in this recovery. But because they are not, you are getting more unequal participation. Currently, investors are still in the market. Investors naturally would be already a homeowner. They're buying their second and third homes. So they are getting these wealth gains. Yet many young people who are renters with good credit, but because they cannot enter the market, they are being left out. So we do have inventory problem, but we need to address the inventory problem directly, not through somehow choking off the demand. I think we need to increase the supply of inventory, and that can come from new home construction. Additional 50% increase in housing start would be a very welcoming thing.
We have seen mortgage rates begin to rise pretty quickly from 3.5% on a 30-year fix to about 4.2% now. Do you think this is going to derail the recovery?
Well, we have been anticipating that mortgage rate will be rising from the unimaginable lows of 3.5%. So it doesn't really change our forecast on mortgage rate. It just arrived a little sooner than what we anticipated. But the momentum continues to be very strong, and many middle part of the country, home values are such that it's still affordable. Changes in mortgage rate really do not change the monthly payment in any significant way. Only in the high-cost coastal regions of, say, California or, say, Boston, New York, Washington, you may begin to see some buyers now beginning to feel the affordability squeeze from it. But the rise in mortgage rates, if that can be combined with some relaxation and underwriting standards, which we are beginning to witness, I think that will not derail the market recovery. And in fact, I have upgraded the overall forecast based on the strength of the pending contracts so that the housing market in 2013 will be stronger than what I anticipated.